Hi, I'm David Scranton, and thank you for watching. Today's video is all about the markets. We've seen record high inflation, a stock market that seems to only go in one direction, and that's up, as well as interest rates, which really seem to be up and down. So what does all this mean for everyday investors like you? Well, let's get a financial advisor's perspective. I want to bring in Michael Burleigh, president and founder of Peak Capital Management, a retirement income store located in Stuart, Florida. Mike, always great to have you here with us.
Thanks for having me, Dave.
So what has surprised you about the stock market so far in 2021?
Well, it's continued run. I would be thinking at this point, the market's getting a little long in the tooth. We've been running really since '09 with a few minor corrections, but just the continued growth in the market has kind of surprised me a little bit.
So when have you become more cautious? And I don't mean philosophically, because you're always cautious and protective with your clients' money, but I mean, we crashed through the record highs, I believe it was last August, only August of 2020, only a few months after the beginning of the coronavirus crisis. So when between the beginning of the crisis and now, did you start to become a little cautious, thinking things are getting a little frothy?
I think we're getting to that point now with inflation kicking in. We really don't know what the taxes are going to look like. There's just a lot of variables out there. So I would say, looking into next year, we could get another year run out of this market, but I would start to be very cautious next year. If I was someone who's looking to retire in the next couple of years, I would probably be looking at maybe reducing my risk if I'm all in the market at that point. You just don't have enough time if we do get a correction to recover. If you're looking to retire in the next 2 to 3 years, you really have to kind of take a look at your portfolio and say, well, what do I look like if we had a 20, 30% market correction? And would I have enough time to recover from something like that?
So Mike, do you think most investors that are part of the income generation are feeling a little cautious or concerned now as you are? Or do you think a lot are suffering from that dreaded word acronym FOMO, fear of missing out?
I think they're getting a little more cautious. It's funny what we hear in meeting with clients and prospective clients is they're concerned about the debt, all the government spending. They're concerned about taxes. They're concerned about inflation and the effects that could have on the markets today. So I don't think it's the fear of missing out anymore. I think it's more of just trying to maintain what they've accumulated and live off the interest and dividends they've accumulated at this point in their life without having to change their lifestyle.
Well, I hope you're right. And I hope the common sense is kind of kicking in where people are thinking about these types of things more. But then again, some people are thinking, well, inflation, you mentioned that earlier. Inflation is going wild, right? So I need to be in the stock market. I need to be in growth because inflationary concerns. So what do you tell people when they mention that to you?
Well, you need to have a balance. I don't advise getting out of the stock market altogether. I mean, you want to have a hedge against inflation, sure. But, Dave, you got to realize, we haven't had inflation like this in 30 years? Mm-hmm. We've got a whole new generation of people coming up that really have never experienced this, right? Mm-hmm. So you think about inflation, what does that really do? Well, you go to the gas pump, it costs you an extra 20, 30 bucks to fill up, right? You go to the grocery store, it's an extra 50 a week to buy your groceries. A lot of people have automatic deduction on a lot of their expenses. The pet food goes up 10, 20%. So at a certain point, that's going to start to affect people. Maybe not, in the next first quarter, but maybe second, third quarter of next year, if this thing keeps running like it is, that's going to start to affect people and they start to throttle back. So what kind of effect that has on the markets and you combine that with the taxes, we don't know where that's going to look like next year. So there's just a lot of things going on out there where I would be cautious at this point.
Yeah. Well, people struggle from, recency bias. Whatever they've experienced most recently is what they think will happen in the future. And you're right, if you have a generation of folks that haven't seen high inflation or haven't really lived through it at a time in their life where it's meaningful, right? If you saw high inflation, but your parents were paying the bills, I guess that doesn't really count as much, right? But when you go to the pump and you see those prices going up, that's a whole different deal. But you talk about keeping some money in the stock market as an inflation hedge, but that doesn't mean that you have to stay growth based. You can still stay in the market, get some upside potential, and have a significant income flow, have a significant dividend yield.
Absolutely. If you invest more for maybe what we call value, where you can, generate a nice dividend on your stock portfolio, maybe you can pull 3-4% in dividends on a value stock portfolio. That's going to give you a hedge there, and you still have some upside potential for the growth. So rather than just being momentum or growth stocks, make that transition to more value.
Sure, sure. And it's funny, you mentioned the things that could knock the market off its perch, and you mentioned inflation. But I think even though probably the most conservative people think that by 2024, inflation will get back down to some normal rate. So in that sense, even if it's 3 more years, it's still reasonably short term. You mentioned the taxes, and that's a big part of it. But how about the Fed? Isn't it true that historically the Feds, they're like the firemen, the arsonist and the fireman. They've created as many recessions as they've actually fixed. And if that's the case, what's the risk of that happening again and the Fed getting it wrong?
Well, that's the ultimate risk, isn't it? They seem to be more reactive than proactive many times. But there's a lot of bright people up there, but they're walking a fine line. It's not an easy thing to do. So, they get this wrong. I think they could send us into a recession in 2023.
And for those watching this video that haven't lived through the 70s, they may have heard in the history books this term stagflation. And one of the things that we're seeing right now is signs of possible stagflation, which is simply defined as where the inflation rate is growing up faster than the GDP, than the actual economy. So you're getting high inflation, but you're not getting growth that exceeds it. It's one thing to have inflation if the growth exceeds it, right? But in the 1970s, we had inflation that exceeded growth, and we're starting to see signs that could be happening now.
Yes. Yeah. So just very cautious. You have to be very cautious next year.
Yeah. Yeah. So if you're going to be in the market, have one finger on the trigger. Wait for it. Maybe if you want to be more aggressive in the market, maybe buy the dips if you're doing it in an income way, like you said, a higher dividend value approach. Any final words of wisdom as we start to get into this holiday season here?
Well, looking forward to the Thanksgiving holiday. Feel like I have a lot to be grateful for. If you're ever feeling a little down, just sit down with a pencil and pen, make a little gratitude list. That'll be a mood adjuster for you.
Great words of wisdom, great advice as usual, Mike Burleigh. All right, thanks so much for being here with us on The Income Generation.
Hey, thanks for having me, Dave.
Thanks for watching today's market update video. If you enjoyed it, please click the thumbs up button, give us a like, and make sure that you subscribe to our YouTube channel for new content each and every week.